thank you very much indeed for those opening remarks, and it's a real honour to be here in Cyprus and to be able to share the stage with regulators and policymakers. Let me, if I may, share a few perspectives from the private sector as a market participant, and perhaps step back a little bit and look back at the threshold question, which was geopolitics and financial markets. And the regulators and the policymakers have covered a lot of ground that I don't want to repeat. But if we take a step back to the beginning of this year and the end of last year, we know the data, the most geopolitical year in history, over 50% of the world's population going to the polls, close to 60%, I think, of the world's GDP. And to strike perhaps a slightly more positive tone, mindful of all the conflicts and the extraneous shocks, most of those political processes actually went reasonably smoothly. And if you go down the list of India and the European Union, whatever the politics, we now have stable government, obviously ending with the United States, with Donald Trump winning a clean sweep, both of the Electoral College and the popular vote, and the Senate and the House of Representatives. And so, as we sort of think about all the turbulence and all the potential threats that have impacted markets, the one thing I would say, and you hear this from investors, is actually the system in many places has worked as anticipated, and financial markets have responded accordingly. But no question, a highly geopolitical year, no question there'll be ramifications going forward, and ongoing geopolitics, as we've seen in Germany for next year and beyond. I'll talk a little bit about the United States and what we might expect in terms of financial markets, but let me sort of move on to sort of my second pillar, which is financial impact. And the regulators and the policymakers throughout the course of the day have talked about dislocation, have talked about turbulence, have talked about uncertainty. That's everything that financial markets don't like, as we know. And financial markets, as we all know, if we're market participants, do two things. They raise and allocate capital, and they price risk. And again, I think if you look back at the year, again to strike a slightly more positive tone, the equity markets, the fixed income markets, the currency and derivatives markets that Harrison and others have talked about have done a really good job. The system has generally worked. It's priced risk, pricing is available, investors have been able to allocate capital, and what we've learned is capital is highly mobile. And it goes to jurisdictions where it feels it can get that return, and it leaves jurisdictions where it feels it's not getting the returns or the value that it requires. What also have we seen? We've also seen from the investor lens in this sort of geopolitical year that political leadership does matter. I was just in Greece a couple of days ago, and there is a story of a country on any footing, if you go back a few years, with a ballooning debt, a fiscal crisis, all sorts of things happening, and there's no question, whatever your politics, that the political leadership and the structural reforms have put that economy in a much better place, and international investors are now looking at that. And there are pockets of that if you look around the globe. So a comment there just to say that geopolitical uncertainty, yes, but that also presents opportunity for political leadership to fill that vacuum and chart a course that has benefits not just for international investors, but for local citizens. Looking ahead, definitely volatility. I won't go over all of the ground in terms of the impact and the bifurcation, none of which financial markets like. I do think that if you take another step back and you look at the reform agenda post-2008, and Vasiliki and policymakers and regulators throughout the day have sort of mapped really the extraordinary response post the G20 of fixing, the house is on fire, the system needs more capital, derivatives need to be safer, more transparency needs to be put in the system, whether it's Dodd-Frank, MiFID, that slew of reforms, which have been pretty well executed. The financial system is safer, despite all of the geopolitical and other shocks, has been more resilient and able, look at the pandemic that we talked about, to be part of the solution as opposed to be part of the problem. So I think let's acknowledge that before we look at what needs to be done going forward. And I really agree. I do think, and I think it's just Vasiliki said at the end, I think particularly looking at Europe, there has been a tendency to get out the regulatory rule book. And sometimes the pendulum can swing a little bit to over-prescriptive regulation. I worry about the European potential response, this is in a personal capacity, not in a Bloomberg capacity, to AI. If you think about the internet, for example, the protocol back in the 60s, 50s, designed in the US, the Brits then sort of take a crack at the World Wide Web, but then it becomes an international protocol and rolled out, and a range of commercial and private players are able to extract it. You look at AI now, and you look at where the investment's going, it's in the US. Where's the commercial extraction going? It's in the US. Where's the actual sort of R&D going? It's in the US. And where is the sort of regulation proportionate and enabling, I would argue, in the US. And so I think there are other areas like that where, with all of this turbulence, we in Europe need to be careful and calibrated about how we think about that growth agenda. Everybody said it here, so I won't go on about it. I do think the template of the Draghi report lays out a path. It's a good path. CMU, there's plenty of work to be done. That's going to require, some of our previous speakers touched on that, some real political will and some real leaning into that before you even get into some of the technical problems. But yeah, absolutely, we're still at 25% of capital markets financing the real economy in Europe, and in the US it's 75%. That's why companies scale faster, and our other guests have talked about that. So I think I've tried to sort of put a few positive notes that actually some of this geopolitics has allowed leadership. Financial markets have been volatile, will continue to be volatile. But I think in terms of the path ahead, it needs to be about growth, it needs to be about competitiveness, and it needs to be about finishing some of the projects, particularly in Europe, that have started, but with that lens of growth and competitiveness.